When it comes to building wealth, one of the biggest debates in modern finance is whether you should put your money into cryptocurrencies or stick with traditional stocks. People on both sides of the argument are passionate, and honestly, both assets have made millionaires. Both have also caused sleepless nights and heavy losses. So the real question is, which is actually better? The answer isn't as simple as picking one over the other. It comes down to understanding the strengths, weaknesses, and risks of each, then deciding what matches your personal goals. Let's start with the traditional path most people know: stocks. Buying a stock means you own a piece of a company. If the company grows, you benefit through share price increases and sometimes through dividends, which are basically your slice of their profits. Over decades, stocks have proven themselves as a reliable wealth builder. They're regulated, they're tied to real-world businesses, and history shows that the overall market tends to rise steadily over time. This makes stocks appealing to investors who want stability and predictable long-term growth. Now compare that to crypto, which is an entirely new playing field. When you buy Bitcoin or Ethereum, you not owning a piece of a company. You holding a digital asset that operates on decentralized technology. The value comes from adoption, scarcity, and community demand. And unlike stocks, which are tied to the growth of an economy, crypto thrives on innovation and speculation. Some investors love this because it feels like getting in early on the future of money and technology. But at the same time, that freedom comes with serious risk. One of the biggest differences you'll notice right away is volatility. You might see a company drop 10% in a day, which feels like a big move. But in crypto, a 10% swing might happen in a few hours, and it's not unusual for coins to crash 50% in a single month, only to recover 200% later. This level of volatility can be terrifying if you're not prepared, but it's also what attracts traders hoping for quick and massive gains. Accessibility also plays a huge role. Stocks are usually traded through brokerages during market hours, Monday through Friday, 9:30 to 4 in the U.S. Crypto doesn't care what time it is. The market is open 24/7, 365 days a year. That means you can buy Bitcoin at midnight on New Year's Eve if you want to. For many younger investors, or those living outside countries with strong stock exchanges, this kind of around-the-clock access makes crypto extremely attractive. Of course, we can't ignore safety. Stocks are heavily regulated. Companies are required to release financial data, comply with strict rules, and give investors some level of protection. If your brokerage goes bankrupt, there are usually safeguards. With crypto, it's much more like the Wild West. Yes, regulations are starting to catch up, but scams, exchange collapses, and hacks are still part of the landscape. If your crypto gets stolen from your wallet, there's no central authority to call for a refund. This makes crypto riskier, but also more free from middlemen and bureaucracy. So, which one offers better growth potential? Stocks have history on their side. On average, global stock markets return 7 to 10% annually over long periods. That means if you invest consistently and hold for decades, you're likely to build serious wealth. Crypto, on the other hand, doesn't have that track record, but it has shown explosive potential. Bitcoin was worth pennies in 2010 and hit tens of thousands of dollars within a decade. Ethereum started at a few dollars and became the backbone of entire industries like NFTs and decentralized finance. If you're willing to take the risk, crypto can generate life-changing returns, but it's far from guaranteed. Utility is another angle to think about. Stocks represent ownership. They're an investment, plain and simple. Crypto can be more than that. Bitcoin is often called digital gold, used as a store of value. Ethereum powers decentralized apps and smart contracts. Other cryptos are used for payments, gaming, or even voting in online communities. While stocks give you a piece of a company, crypto gives you exposure to emerging technology that could transform industries in ways we can't fully imagine yet. So what's the verdict? Which one is better? The truth is, it depends on your goals and risk tolerance. If you want stability, consistent returns, and a safer environment, stocks will always be the foundation of most investment portfolios. They're the go-to choice for building long-term wealth and retirement security. If you're younger, more risk-tolerant, and want to chase potentially massive upside, crypto offers opportunities that no traditional market can match. But you need to be ready for the volatility and the possibility of losing money just as quickly as you make it. The smartest investors don't see it as an either-or choice. Instead, they use both. Stocks can provide a stable foundation, while crypto can be the high-risk, high-reward side of the portfolio. Maybe that's 90% stocks and 10% crypto, or 80/20ths, or even 95/5ths if you want to dip your toes in carefully. The balance depends entirely on how much risk you can stomach and how quickly you want to grow your wealth. At the end of the day, crypto and stocks are tools. One is a proven system for long-term growth. The other is a revolutionary new asset class with wild potential. Your answer will guide whether you lean towards stocks, crypto, or a healthy mix of both. And with that, I want to hear from you. Are you team crypto, team stocks, or do you believe in a balance of both? Drop your thoughts in the comments. Smash that like button if this gave you clarity. And don't forget to subscribe to BizChain for more straight-to-the-point guides on money, business, and crypto. Thanks for watching, and I'll see you in the next one.